So today I want to go over a really good short pattern that I traded. The ticker symbol is IBIO. Just a little history of IBIO. It was a big runner recently on news that ran for 2 days, which is a really good sign. Shorting stocks that run for 2 or more days usually increases your odds much more than people who systematically short a day one. But nonetheless, big 2-day runner. I ignored it on day one. Day two, I was thinking about shorting it, and I'll just show you why really quick. If we zoom in here, you could see we have this high of day clear out into the afternoon that slammed right back down. And to me, what that said was all the shorts got squeezed out, and now it could potentially fade. It did end up fading into the close, but I just wasn't ready to be short. So I waited until this morning, April 1st. So this morning, if we zoom in here, or before I do that, I should read over what I said last night on my Substack here. I'll drag it over. And what I said was IBIO the pattern is a first red day short. I said this pattern's really worth it because it's a 2+ day runner with great volume. Like I said, any stock that runs 2 or more days is usually better odds for a short than a 1-day spike. And if it's trading great volume, it has great liquidity too, and range, even better. I said looking for some sort of first red day short, a gap up or a gap down. Gap up will be more aggressive, and a gap down will start smaller and look to short into spikes, maybe using red to green as risk. We'll have to feel it out in the morning and let the levels consolidate higher better. So what we got in the morning here was a gap down. This is the previous close line, red to green level. We gapped down. We were consolidating below all of pre-market. And if I pull up my actual executed trades here, you could see, let me just zoom into my pre-market here. Well, let me drag it over one sec. If you see here, let me make it bigger. I started short pre-market in here, around this area. And then I started scaling in right before the open as we stayed red on the day. That's a good sign for shorts. Market open and we started perking up. So I took off half just to be safe, but the second we slammed here, if I zoom in, second we slammed, I reshorted, added when we cracked VWAP and was looking really heavy with a good risk reward, tried to add a little more, and then the bottom just fell out. And I just took my profits. I covered. I said, we hit my goals rather quickly. So I took that gain and I moved on. If we look on this chart, which is a little easier to look at. Yeah, so I shorted pre-market, covered as just half, just to manage risk in case it wanted to go green. I would have shorted more into a spike. And then, yeah, when we crack, 50 cents like that, in a matter of 1, 2, 3, 4, 5 minutes, you got to take that gain. At least in my opinion, it wasn't a swing for me. It only would have been a swing if I was shorting it on Thursday. But the fact that this happened so quickly on a Monday, this first red day part of the pattern, I'm taking that, 10 times out of 10. And just to go over my thoughts now going forward, as this goes on day by day, now I'll be looking for a potential bounce play. I think as the liquidity and the volume, as we can see the volume's drying up a bit. Yeah, it's still trading a good amount, but as it dries up, I think it's better odds of a bounce, especially with a daily chart pattern like this. And that's my list of first green day play that you could read about on Substack or just read the watch list if you subscribe to them. And yeah, other than that, I tried a few other names today. Fannie Mae particularly was one that annoyed me because I had 25,000 shares here at 153. This dip scared me out, and then it had the green day it should have theoretically with the daily chart, but it sucks. I missed it, whatever. But IBIO was really the main play of the day for me, the A+ play, where I was able to lock in a quick $1,200 in a matter of 30 minutes of the market open. Then that was really my day. It could be as easy as that if you focus for the best plays manage your risk well, scale in accordingly at the correct levels. And it's as simple as that. No need to go into any more depth in it than I already did. If you have questions, leave them below. If you want to go to my Substack and read more about it, I have articles about first red days, listed first green days, my patterns. You could go through the watch list and just see historical patterns that I played like this that are similar. But it's just very simple pattern that worked out very well. You just short using that green red risk level as we see it turning over and we get that hard crack. I locked it in, quick $1,200 in first 30 minutes of market open. It could be as simple as that, trading the first red day pattern.